What's up, guys? Welcome back to Rougefx. Today we are going to be going over pattern recognition, how to identify patterns, how to understand the market structure, as well as the price action that correlates to the market structure in order to identify these pretty significant patterns that price very much does print on the regular basis, right? These are just, a lot of people, they have a hard time finding ranges. However, I feel like if you understand a more simple approach to obviously identifying pattern recognition, at that point your ranges kind of comes as not necessarily a byproduct, but of course as you do your due diligence, obviously putting in the work, adding toward your experience as well as your repertoire of confluences, you can definitely implement this as well, so you can understand when, where, and why these patterns are very much, presenting themselves and how to take advantage of them. We are going to start off with the bullish aspect of these individual patterns, right? So we definitely have the bullish variation as well as the bearish variation. There's going to be 5 different bullish variations as well as 3 different bearish variations. So as you can see, I'm going to be, illustrating a few markups, and yeah, if you want to just give me time, I will very much um, get into the details as well as what their names are as well as what they're called and how do you identify them as going forward within the markets. um, as you can see, we're going to start off with a pretty simple M, right? This is going to be a simple M. As you can see, what makes it so simple is we have our strong low weak high price retest provides a failure swing. In whichever case, it very much does not continue towards the highs. We mitigate, I'm going to say this again, we mitigate this high towards the left. It could be very much a liquidity grab as well, but in many cases mitigate and continue towards the lows, pay the trader at the inducement, as well as continuing towards obviously internal range liquidity. Price obviously reacts to a point of interest towards the left and continues higher. This is going to be called a simple M. Moving on to our next pattern, we have a low that's established, a high that's established. So in whichever case, strong low, weak high, price definitely retests. In whichever case, establishing a weak low continues towards the highs, not necessarily breaking or not necessarily, obviously liquidating, but more so mitigating the high towards the left, continuing towards the low, or the weak low that had been established, before, mitigating that, in whichever case, inducement or point of interest towards the left and continuing, towards the highs. This is going to be called a natural M, right? This is just establishing, of course, your strong, low, weak, high. Rated sell side liquidity in this case, what's next? Buy side liquidity. Price rated buy side liquidity in this case, what's next? Sell side liquidity. At this case, price rated, the inducement towards the left, we can continue towards the highs. This is going to be called a natural M, right? Pretty simple. Moving on to our next pattern, we have a low that's established, a high that's established. Price very much takes that internal range liquidity towards the left and continues higher. Price, in whichever case, ends up breaking a major high and retesting to take out internal range liquidity and continuing towards the highs. As you can see, the trend within this bullish M is very much apparent. We are very much holding protected lows. This is going to be called a bullish M. It's going to be a bullish M, right? So we have a simple M, we have a natural M, and we have a bullish M. Moving on to our next pattern, we have in whichever case, this would be called a big bullish M, right? As you can see, we have definitely established a strong low, weak high, left an inducement, continue towards the highs and taking out a major high, right? Or maybe a choke, or however the case may be. There is very much a major or a break of structure being, taking place. Price retested, takes out internal range liquidity towards the left, whether that be an inducement, imbalance, whether that be a pretty significant point of interest. We understand that price has fulfilled any kind of liquidity void towards the left and continues towards the high. This is going to be called a big bullish M, or in short, BBM. Moving on to the last and final M in our, in this case, bullish variations, right? So long opportunities, we very much have a, in whichever case, it's going to be called a bearish M, right? So what price is very much going to do is it's going to go into a pretty steep amount of consolidation. As you can see, we will very much manipulate out of it. We will very much create, in whichever case, our high of the day, or however the case you want to be, it's going to create a pretty significant high. So in this case, a weak low, strong high. Price establishes an inducement, retest. In whichever case, it can very much liquidate, it can very much raid, it can very much, however, it can definitely mitigate and continue towards the lows. This is going to be called a bearish M. It is important to recognize before the move even happens, even after, right? But before the move even happens, if you're looking for that or trying to identify a bearish M, it is important for you to understand that consolidation will come before it. You know, at that point, it's about, understanding that what is price doing? Are we liquidating? Are we, breaking a major high, or are we holding? Are we mitigating? And if we're mitigating, where are our protected highs? How can we scale in, to get a piece of whatever's actually happening? Because in whichever case, price is definitely reaching for what? It's reaching for internal range liquidity, right? Because, I mean, as you can see towards the left, we probably, most definitely, more than likely have a low to high situation. And then price, enters a consolidation, maybe like manipulating out of it, reaching, buy side liquidity, as well as continuing down towards sell side liquidity. This is a bearish M. Next, I will be obviously finding these patterns within the markets and obviously identifying them, right? Helping you identify that these patterns are very much within the markets and they can be traded and very much taken advantage of with, obviously the correct experience as well as practice, right? As you can see, this is going to be labeled, or in whichever case, this is going to be the big bullish M, BBM. As you can see, we have a major high being broken. We have a strong low, weak high. So our range is very much apparent. We have an inducement, or in whichever case, liquidity. So these equal lows or sell side liquidity that's leading to be or needing to be rated. And obviously, very much carried out that raid. And we held a higher low to continue towards the highs. This is a big bullish M. As you can see, price definitely, in whichever case, established a pretty significant bullish M, right? So in this case, we established a strong low, weak high, and obviously the trend continued from there. However, it is important to understand that we do have a trend line. We have a series of protected highs holding or being upheld. Even if it's like wicking, it's literally just wishing for internal range liquidity and continue towards the highs. This is a bullish M. Can you see it yet? Well, if you haven't, guessed where it is, it's very much going to start off right here. We have a bit of consolidation. So that should already give you a pretty significant hint as of where or what's actually going on within these markets. We manipulate out of that consolidation, leaving a pretty fair amount of liquidity towards the left. As you can see, we have the overall consolidation. As you can see, we have the consolidation that's obviously needed to identify this bearish M. We have the manipulation out of it, which, I mean, of course, definitely doesn't have to happen. We can definitely handle this bearish M from up here, of course, but it's just this is what the market structure very much presented. So, yes, we very much did manipulate out of this move and obviously retest, taking out internal liquidity towards the left. So, in whichever case, price established a overall protected high, weak, low, created a pretty significant bearish M setup. So, right, so in whichever case, we established a high, rated that high, and or mitigated that high. It really just depends, again, on your market structure, and continue towards the lows. And this is just understanding market structure as well as price action, again, at a pretty significant level. Understanding that price needs to, of course, carry out a pattern in order to move liquidity or manipulate towards or draw towards liquidity. Again, accumulation, we have a manipulation out of it. Again, it's optional. It's really just what the market is presenting. We come back or retest, take out internal liquidity, as well as, providing our failure swing or our, again, failure swing to confirm our overall bearish intent. Any kind of protected highs in this case are very much going to hold because we are bearish all the way down towards the lows, as you can see. Pretty simple. As you can see, this can very much act as a pretty significant simple. The simplicity of these M's really just is really just based off of the overall range. We have a strong low, weak high. Price obviously left a significant trend line for maybe an inducement. Um, Price obviously manipulates out of pretty fair amount of consolidation, retest, and obviously is drawn towards internal range liquidity. At this point, price fails to break any kind of low before that, as well as any kind of high above this internal range liquidity, continuing towards the lows, forming a pretty or a fair amount of liquidity, which would end up being what equal lows. Price rallies higher and raid obviously this liquidity pool, continues towards the highs. It is very much important to understand that there's very much highs or higher lows being upheld. When you get those few ticks or those few candle closes that in a way confirms that your overall trend line is very much apparent, it very much helps. This is going to in a sense again act as your simple M. As you can see, this is going to act as a pretty significant natural M, right? We have our structural low or strong low, weak high in whichever case. Price enters a pretty significant consolidation. However, it is very much important to understand what's actually happening between the consolidation, right? We are having a transfer of order flow. We are definitely upholding our higher lows. And then at that point, you can understand how is it that these patterns can definitely hold, right? We definitely have in whichever case, a natural M that continues towards the highs, right? It's pretty simple. I don't want to confuse anyone or actually like talk anyone's head off into confusion, right? So obviously, this is what it's going to look like. Pretty significant or fair amount of mitigation that's actually happening. And it's really just equal highs and equal lows being not necessarily rated, but in whichever case, very much rated, of course, but also mitigated, right? Okay, guys, so we do have a fair amount of bearish variations to look at. However, I'm going to cut this short only because we are pushing around 20 minutes, which is not inherently long, but I do want to keep this a short video for now, as well as, give you guys time to really absorb this knowledge and put it to very much good use. As you can see, we very much did go over bullish variations of, different M patterns, right? So we did have a simple M, we had a natural M, we have a bearish M, a bullish M, and a big bullish M. These are all different ways to identify pretty significant bullish setups, right? Just the FYI, I did forget to mention that after this bearish M is very much formed, you can very much expect price to continue towards the highs and, in a sense, pretty much reverse, right? Because price built this liquidity towards the highs. It only makes sense, right? Why would price leave a pool of liquidity untouched, right? And to a certain extent, not necessarily just, oh, that's why, but it's really just important to understand that after this bearish M, it's important to understand that we are definitely looking to rally to maybe the 50, maybe mitigation, or maybe liquidity raid in general, right? It's just very much possible. It's something to look out for. Another thing that is important to look out for as far as these patterns is understand that a lot of the times it's going to come with a trend line, right? So when you learn to identify the trend line, it gets a little bit more easier, right? And especially as far as this whichever case bearish M setup, because this setup is very much bullish, but on maybe a higher time frame. You know, it really just, of course, depends, but it's just trusting and understanding that even if price doesn't continue up towards the highs all the way up, price is definitely going to mitigate this internal range liquidity towards the left, internal range liquidity towards the left, maybe mitigate, maybe fill in the liquidity void, maybe in whichever case raid towards the highs and shift in momentum in general. It's all very much possible, and it's all very much a thing, right? So it's just adjusting to price as well as what it's doing as well as what it's telling you, right? It's just about reading price action and market structure and adjusting to what is being presented. If you haven't already, hit that like button, subscribe to the channel because we do aim to post consistently. Ring that post notification bell, stay updated on all our videos. This has been part 1 of pattern recognition. It's going to be the bullish variations, or M patterns. Let me know how these work for you guys. If you do want part 2, be sure to hit that like button, subscribe to the channel. That's all you got to do to show me that you are ready for the bearish variations of this pattern recognition series. Until next time on Rougefx, y'all have a great night.